Hello everyone, it's Friday, November 20th. We're glad you're with us. I'm Charles Brown, Portfolio Manager with CB3 Financial for Stock Charts TV. This is your Daily 5, information on how to manage portfolios using the RRGs within Stock Charts. We're glad you're here. CB3 Financial is a fee-based registered investment advisory in Chicagoland. We are basically a family office that trades for our own accounts, plus select clients that like to use the methodology that we talk about in these videos. You can find out more about us at cb3financial.com, and if you click in the YouTube link up at the top there, you see it's highlighted in yellow. You can subscribe to my videos. I'm live Mondays and Thursdays talking about COVID and the markets and politics and everything that moves portfolios. As I said earlier, we are a registered investment advisor, so unlike some commentators, we actually trade what we talk about on these programs, not only with our own accounts, but with our client accounts. So let's get to that. What are the markets doing right now? Okay, so as of this afternoon, this is recording this a day earlier, of course, the Nasdaq up 32.7 for the year, S&P up almost 11. We got green on the screen with the Dow and the S&P 500. This has taken quite some time to get this kind of move. The Dow up 3.3, Russell up 6.9, almost 7%. Russell overtaking the Dow. Russell was way behind all the other indices for most of the pandemic portion of this year, which is all but the first 6 weeks. So we consider this basically a rotation, at least in the last week and a half or so, away from the mega cap stocks that were what we were calling the pandemic stocks, and basically the other asset classes playing some catch up. And that has caused us to change our strategy a little bit on how we benchmark. So far year to date, our growth program, CG, if you guys have been watching my series, you know our CG program, Capital Growth, up 45.6 on the year. Happy about that. Definitely killing the S&P. Today we're going to focus on DG. This is our ETF program, still up 18.5 roughly on the year. Pretty much been ahead the entire year and pulled away in September and keeping that lead, we hope, into the end of the year. And I just want to give you some strategies on how we are managing this program. So, as I think I've told you in previous episodes, we always benchmark our programs to the S&P 500 for our client's view. Now, internally, we're looking for what is the strongest index, and we benchmark our own performance against that. So you could argue that the S&P is sort of a low bar this year since it's dramatically underperformed the Nasdaq. And actually what I'm showing on this chart is just over the last 8 months, the Russell 2000, look at the green box there, has overtaken the Nasdaq 100 in first place, in the yellow box on the other side. Love this chart in Stock Charts, by the way, or I can get 4 indices on here in one shot and look at the combined volume at the bottom. But the IWM up 72%, Nasdaq up 64%. This is actually even more dramatic, and this will be my second chart. If you look at it just in the last 3 months, I mean, the Russell is just pulling way, way ahead. So what that tells me as a money manager is if we want to make money with stock charts, we can't just say, okay, we're just trying to beat the S&P 500 because, again, it's just a low bar this year. What we have to do is saying, okay, so now the asset class, the small cap asset class, is really coming to life here in the month of November, ironically enough, right after the election. Now, we all know as of this viewing that the election is still undecided, but for us, we are now paying a lot more attention to the small cap asset class than we had been. So if we look at this in the rotation on the RRGs, what I like mostly, and I put this in green, the IWM did what I call a jackknife. Now, I don't know if Julius de Campinar, who designed these, would call it a jackknife, but I like that phrase. The Dow and the SPY, the S&P 500 in yellow there, weakening. The QQQs also in weakening, but I've got them in green because they're turning back up. So now the Qs and the small caps are kind of taking the lead here as far as what is moving out in front and being the trend setter, the pace setter, if you will, for this market. So with that in mind, I'm going to look at the weekly sectors versus the S&P. So what am I seeing here? Well, these are the actual holdings in our program. So I would be a little concerned about EWG. I was diversifying into the German market. It's not performing as well as the Japanese or the emerging markets. You see EWJ and EEM in green there. I like how EEM also did a jackknife, and that's largely due to the fact that the dollar, after peaking, has now fallen off and become weaker. That favors the currencies of these emerging markets. You'll also see IBB and XLV. We had lightened our position in healthcare. We now have added a little bit to that just over the last week or so. But, if I were thinking about lightening up on EWG or even eliminating it from the portfolio, the reason I don't is because I look at the daily RRG. So I go back and forth between the weekly and the daily. I've highlighted in red a bunch of sectors that just aren't doing anything, not just sectors, but industry groups. And look at the top, EWG, looking pretty strong up there. And so that's giving me pause to think, okay, most of the year, it's been the U.S. that's been the leading producer of returns in the market. But with the dollar weakening, do I want to have some Asian exposure? Yes. Developed markets. Do I want to have some European exposure? What's the biggest market? Germany, EWG. And do I want to have some emerging markets exposure? And the answer is yes. I've also bumped up our exposure to the industrials. As you can see, I've highlighted it in green as well, looking really strong at this time. So I like RRGs because I can, in an instant, go back and forth. Let me click back here to the weekly. This is what these various holdings look like on a weekly basis. Again, I'm liking EEM, EWJ, EWG, possibly a problem, but again, when I come back on the daily chart, look at EWG there in green, and I'm going to hold that longer. I'm going to play out this weak dollar to see where that goes. Not going to make any changes in the portfolio based on these three holdings anyway. So here's where we are. We've got, these are the actual holdings we have in DG, or Diversified Growth. Obviously, these have changed over the year to get this 18.5% return. But in EEM, 3%, EWG, 3%, EWJ, 3%, IBB, 3%, IWF, 11%, IYT, which is transportation. I'm liking what's happening here in trucking in that industry group. QQQ, 14%. That's down from at one point almost 22%. Silver, at one point I had it 11 or 12%, down to 3%, but I still like that for some materials representation. And then it's rounded out with the communications sector, the industrials, which I mentioned. We started that position with just a small 2%. It's now 4%, and I think that's going to get a bump in the next review, which is coming up. Technology still at 13, but I'm going to need to see that pick up. Historically, technology doesn't do that well in December, so I don't think we'll be adding to that and may indeed be reducing that size. And then healthcare and consumer discretionary. So what am I looking at? In red, you'll see IWF and QQQ. Those are going to get reduced, and IWM will come in at a wait to be decided over the weekend here as I work on the portfolios. Might possibly expand EWJ and EEM based on the strength that I showed you earlier, but IWM, Russell 2000, is definitely going to have a bigger place in the portfolio going forward. So that's where things are. If you'd like to follow what we're doing, please hit subscribe on our page, our YouTube site. Hit the little bell and you'll get updated when we go live with various videos. I'm live every Monday and Thursday. Follow us on Twitter and you'll get updates as well. Sometimes they're technical, sometimes they're just influences that are weighing on the market that can affect us down the road. Really appreciate you watching. I'm Charles Brown, Portfolio Manager with CB3 Financial in Chicago, where we don't just manage your assets, we become one of them. And for Stock Charts TV, this has been your Daily 5. We will see you next time.